Welcome, attendees. We are so excited to have you all. We'll give it one more minute as folks are joining in, and we are so excited about tonight's call. As you are jumping in, make sure in the chat to give a shout out of where you're coming from. We'd love to see and hear where you're representing tonight, because tonight is going to be a really exciting call. All right, well, we are at 6:05. Thanks so much for your patience, everyone, as we were joining in tonight. Tonight, I am so excited about the call that we're going to have. So let me first introduce myself. My name is Keisha Bross. I am the Director of Opportunity, Race, and Justice for the NAACP. And as you all have probably met me before, as we've had our field calls or our calls for our members across our field, I work on economy for the organization. And tonight I am joined by two just phenomenal speakers and folks that just hold so much wisdom and knowledge. And I say wisdom and knowledge because I'm excited to be joined tonight by Wisdom Cole. Wisdom has been with the NAACP going on, I think, 5 years, Wisdom, or 6 years?
6.5 years.
6.5 years. Wisdom is actually now in a new role, and he represents as our Senior National Advocacy Director. Wisdom, you all may know as the one who actually led our efforts on the cancellation of student debt with our youth and college team for many years, and we're excited to have him. And the other person joining us today is Julie Margaretta Morgan, the Associate Director of Research and Monitoring and Regulations at the CFPB. And if you all are not familiar with the CFPB, they're Consumer Financial Protection Bureau. They are charged with protecting our financial wellness and our financial security across the country. And we're really excited to have them here. So just based on the fact that we have elections coming up, and we know one of the top issues for voters across the country is economy. You all tell us all the time how much economy is important to you. And so tonight we thought it would be best to host our call around not only economy, but the cancellation of student debt, alongside the work that the CFPB is doing around protecting around student loans and student debt. And so what I'm going to do first is introduce Wisdom, and I'd love Wisdom to set the tone for the night. The student debt advocacy, the work that we've been doing at the association, all the amazing things that Wisdom has advocated for. Everyone knows him. As you see, his face is all over the NAACP, and we are so excited to have him. So Wisdom, thank you so much for joining us tonight. After Wisdom talks, we're going to go into a moderated Q&A. And if you all have questions, please use your Q&A option on the bottom of your Zoom screen. It actually has a little question mark, and go ahead and put your questions in there. And I'm happy to ask that to Wisdom and Julia, our guest speakers. So Wisdom, please let us know about student debt. What is it about? Why is it important? And how does it impact Black people?
Thank you so much, Keisha. I really appreciate that introduction. And it's really great to be here with you all this evening, advocates, activists, organizers, enthusiasts, folks who are all engaged in the fight for civil rights in America. It is an honor also to be here with our partners at CFPB. These are folks who have also been in this fight with us, who've been supporting us and engaging with us around this inclusive economy portfolio. So just to start at the beginning, one of the reasons why NAACP has been a big advocate for student debt cancellation is because student debt cancellation is a racial justice issue. For so long in the student debt cancellation or advocacy space, student debt cancellation was almost seen as a rich white kid issue. Oftentimes early in the campaign, you would hear President Biden talk about, the rich kid at an Ivy League university trying to get off on not paying back his debt. And that is not the reality in which we live in, right? The reality in which we live in is that Black borrowers are taking out more and more debt than their white counterparts. The average Black borrower takes about $50,000 in student debt. And so it's actually $53,000 in student debt. And when we think about the need for racial equity in America, and thinking about college education as the passport to our future, or access to good paying jobs or careers or upper mobility, we think about the narratives that are oftentimes given to communities of color. You need to go to college to be successful. You need to go to college to get a good job. You need to go to college to better your future. If we are sending people down this route, and we are giving people the opportunity to enter into these ivory institutions, then the cost of higher education should not be a barrier, right? And so when we think about the opportunity to eliminate student debt, it really is an opportunity to really create racial equity in America through an economic lens, right? Oftentimes we talk about student debt cancellation as a racial justice issue because it's an opportunity to reduce the racial wealth gap in America today. And so as we think about the way in which this campaign really evolved, our campaign at the NAACP was called the 50K and Beyond campaign, which really advocated for the cancellation of a minimum of $50,000 in student debt. But for quite some time, young people, advocates have been coming up to Washington, D.C., talking with legislators, talking with lawmakers, proposing student debt cancellation as a just and equitable policy. And they looked at these young people and they said, "You're crazy. It's never going to happen." But in the midst of a global pandemic, in the midst of everything that was happening in 2020, we saw a consistent outcry and outpour for the need to cancel student debt. We saw almost 50% or more of our legislators in Congress consistently advocate for debt cancellation. We saw both young Democrats and young Republicans advocate for debt cancellation. And so we also saw President Biden, who was then on the campaign trail, making promises that he would cancel student debt. And so part of our work was really making sure that our elected officials were accountable to the promises they make, right? Oftentimes we see elected officials come into our community 2, 3 weeks before an election and they promise this, they promise that. And we are sick and tired of that. We want to make sure there's actual policy. We want to make sure there's actual plans. And so part of our campaign was really making sure that there was a strong accountability, but also making sure that student debt cancellation was seen as a racial justice issue, making sure they were aware of the burden that student debt had on Black communities, making sure that folks understood the opportunity to cancel student debt as an opportunity to see a racial equity in America through the opportunity to access to jobs, access to generational wealth, access to buying homes, access to really begin to start small businesses and other opportunities that really can change the course in the future of our lives, right? I think back to, I believe this was in 2020 or 2021, we saw a lot of the young men who graduated from Morehouse see all of their debt eliminated at once, right? The opportunity to step into a brighter future where you are not burdened with the weight of student debt. Folks ask me why I'm also such a staunch proponent, an advocate for student debt cancellation. And that's because I'm also a student debt borrower, right? I have $30,000 in student debt. And for a long time, we saw student debt as an ugly thing, right? Like, I can't share this with people. This is something I have to carry with myself in shame, right? This idea that this is a problem that I have and it's my problem alone. Well, if we believe that education is a fundamental right for everybody in America, and we feel that folks should be able to have the opportunity to access these institutions of higher learning, then it shouldn't be a barrier at all. And so we put the onus on the government. We put the onus on the collective we, that we have the opportunity, we have the power to think big, to organize big, to advocate big, and to eliminate student debt in America. And so some of the things that we were really proud of within this campaign is that through the consistent drumbeat, through sharing our stories, through talking about how student debt is not only just a young person issue, it's an issue that spans multiple generations, right? The NAACP, over 115 years old, we have members who are well into their 60s, 70s, and 80s and are still paying back their student debt. Right. We see people who are struggling in their later years to be able to hold down a job or to be able to buy a home because they have the burden of student debt. And so when we see the elimination of student debt, it's really all signs point to a better economic future, not only for the marginalized communities, but for everybody, right? Due to elimination of student debt, that means more people buying homes. That means more people feeding into the economy. That means an increase in the GDP, right? These are all things that are helping and supporting our community. And so to be able to see that there was a proposal put in place by President Biden to not only cancel $10,000 in student debt, but to cancel $20,000 in student debt for those who were recipients of Pell Grants, right? We know that 86% of HBCU graduates are Pell Grant recipients. Majority of Black and Brown folks who are going to college are Pell Grant recipients. And so that was an equity lens that was applied to a policy framework. Unfortunately, we saw, this to be contested at the Supreme Court, and it was shot down. But when it was shot down, we said we were down but not out, that we had the opportunity to still cancel student debt through the Higher Education Act of 1965, which literally gives the Secretary of Education the power to eliminate any barriers to higher education. And so it was my honor to also serve as a key negotiator in the negotiating rulemaking process, where we were looking at the Higher Education Act of 1965 and how we could apply it to ensure that we could cancel student debt. Through that process, we were able to determine multiple factors, particularly looking at hardship and the way in which people who are impacted by hardship would benefit from debt cancellation. Over the past couple months, we've been going through a lot. There have been a lot of lawsuits. The plan is currently paused. One of the plans that will also helped lower the cost of payments, the SAVE plan, have also been paused. And so where are we right now? We have talked about Project 2025, and a lot of Project 2025 is actually designed to undo a lot of the debt cancellation and progress that we've made. And so we are living in that Project 2025 reality right now. And so, again, I want to thank Keisha and CFPB for having me here. I'm excited to get into this conversation because now is the time to organize. Student debt is on the ballot. Student debt is a voting issue, and we have to turn out.
And I'm so happy now to be joined by Julie Morgan. And Julie, I have already introduced you, and thank you so much for joining from the CFPB. So we all know how important the CFPB's work is, in addition to how you all have continued to advocate and protect the rights of financial wellness. So can you speak to the role of the CFPB ensuring that student loan borrowers get relief for harm? As we know, a lot of folks in the student debt space has either been wrongfully just wrongful issues with loan servicing departments, issues with student debt and how that's calculated on credit scores. There's just been a lot of financial issues with that. So we'd love to hear your work at the CFPB regards to student debt.
Sure. Thank you for having me here. I'm excited to be on the call. Sorry, I had some technical difficulties getting on. But I signed on to listen to Wisdom talk about it. I could listen to you talk about student loans all day. It's like one of my favorite topics. And you made a ton of really good points. So CFPB works on student loan debt in a couple of different ways. The first one is our ability to do research. So we have a responsibility to research potential risks or harms for consumers, and student debt is a big one. And I think our role there as just kind of like a documenter of the student debt crisis dates back to the work that Director Chopra did when he, in his first role at the CFPB, when he was the student loan ombudsman. And CFPB was kind of one of the first agencies to put on the map this idea that student debt was growing at such a rapid clip. So I remember, at that time I was working in the Senate and seeing the figures showing student loan debt going over $1 trillion was kind of an eye-popping figure for people, and seeing student loan debt surpass other kinds of common consumer credit like auto loans to become one of the biggest sources of debt for consumers. And that research, I think, has been really helpful in sort of shaping the way that we think about student loans today. 10 or 15 years ago, you would hear from economists and policymakers that student loans were just kind of like a benign way to help people achieve the American dream. And some of the research that CFPB did to actually document the harms of predatory lending and the harms of student loan servicers who weren't playing by the rules were actually having on families shifted people's perspective on it to be much more skeptical of the role of student loan debt. And then, of course, a lot of the research that outside researchers have done has helped build that up as well, including helping to show the role of student loan debt in the racial wealth gap. So that's our first role. Our second and third role are related. We enforce consumer financial protection law against federal student loan servicers, and then we enforce the same laws against private lenders and private student loan servicers. And in some cases, that work is getting direct relief for student loan borrowers. And in some cases, that's getting loans wiped out. In other cases, it's getting monetary relief to borrowers. In many cases, we're also able to order changes to student loan servicer practices that can help relieve students. So we have this kind of direct impact on student loan debt for some students and borrowers. And then we also, I think, as a former Department of Ed employee, I really was the beneficiary of kind of the indirect impact of CFPB's work there, because CFPB documented a number of the harms for consumers related to servicing practices that were difficult for an outside regulator like the CFPB or a state AG to get at in a more universal way, but that the Department of Education could. So the work the Department of Ed did on the public service loan forgiveness waiver, I think, is a good example of that. It built on this record of work from the CFPB and from state attorneys general, where they were documenting practices of private student loan servicers, or the FEL servicers who service federally guaranteed loans, misleading borrowers. And they really helped shape this larger problem where people who should have gotten their loans forgiven under this program that promised forgiveness after 10 years were instead paying on the loans for 15 and 20 years. And then the Department of Education stepped in. I think our most recent settlement with Navient is a really good example of kind of both sides of that. So the CFPB embarked on a lawsuit against Navient for steering student loan borrowers into forbearances instead of better options like income-driven repayment plans. And we pursued this lawsuit over a pretty long period of time. And in the end, we were able to get a pretty sizable settlement from Navient that provides direct relief to borrowers who are harmed by Navient's practices. But the lawsuit also helped kind of surface this idea that income-driven repayment wasn't working for people, that the servicers had not actually been really counting people's payments over time, which was sort of alarming, right? Because again, people had been promised forgiveness on their loans, and they weren't getting it. And the work that we did there served as the basis for a lot of oversight from Congress, and then eventually actions by the Department of Education to provide what they call the income-driven repayment waiver, where they went back and said, look, we've messed up these payment counts over time. Possibly some people were steered into forbearance, and we're going to kind of use our broader tools to address those problems and provide forgiveness to people. As a very long-winded answer to your question.
No, Julie, I think it was a great tee up exactly to what Wisdom was saying before around the work that we've done. You all have been advocating for it as well. And so my next question goes back to Wisdom. Wisdom, you're in a new role. However, you are really the face of this national effort of the cancellation of student debt. And so folks know you for that and trust what you have to say about it. So I would love to hear from you how, if folks on the call want to advocate for student debt forgiveness, how can they do that? And what policies exist right now, or policy changes that they need to advocate for in their space?
Thank you. I appreciate that question. And really shout out to you, Julie, around that lawsuit to Navient. That was major and a major win within the student debt space, right? What I really love about the student debt cancellation space and the coalition space, it's really a group of student debt avengers, right? Everybody has different skills, everybody has different areas of expertise, but when we all come together, we are truly able to get results for borrowers, for ourselves, for the community. And that's because we think about this from a big organizing and a big advocacy lens, right? Let's start by dreaming big, right? Let's dream of a world of broad-based debt cancellation. Even better yet, let's dream of a world of free college, right? Let's think of a world where we're able to really think about these big ideas that can allow us to transform the world that we live in, right? And so one of the messages I really want to send out tonight is that this fight is far from over. Right. It's not done until it's done. I've repeated that over and over and over again. That we're going to continue to return to the table, that we're going to continue to fight. Young people and all people really have been advocating for this even longer than I've had debt. Right. And I graduated college 10 years ago. And so to really be able to make sure that we keep that top of mind, right, that we want to go broad, we want to go big, we want to serve the most amount of borrowers to see the most amount of debt eliminated for them, right? Through our advocacy efforts, we've seen some expansions around public service loan forgiveness, and I think there's still more for us to go. I think we have to think about, I might be frozen. See me? You're good? Everybody's good? Okay.
I'm good. I could see you, Wisdom.
Another thing that we have to think about is interest, right? One of the things that impacts the Black community the most is how long the interest stays with Black borrowers, right? Can we think about ways to lower the interest rate or completely eliminate it, right? Why are we making money off this debt? Can we make sure that we are targeting marginalized communities that are disproportionately impacted by the burden of student debt? As I said, thinking about debt-free college, thinking about Pell Grant expansions, right? These are things that are tied hand in hand together. We have to think about the ways in which we are messaging this. One of the things I loved about this campaign the most is that we were thinking about it from an equity lens, right? Thinking about what is just for all, what is a way in which we can ensure that those who have been wronged in the past are making the rights now. How are we also thinking about the moral argument? Oftentimes folks will talk about debt cancellation is not fair, and debt cancellation is only for the elite, right? But when we look at the facts, rich people are not taking out student debt. It's those that are coming from marginalized communities, those that are coming from a weaker economic basis. They're taking out the loans because they need it. They're taking out the loans because that's the only way they can go to college, right? We have to think about the long-term benefits of debt cancellation for our community, for our world, right? As I said before, it's an opportunity to reduce the racial wealth gap in America today. Thinking about the ways in which we are thinking through legislative engagement, right? In my new role as Senior National Director of Advocacy, it's important for us to make sure that we are consistently talking with our legislators and lawmakers and recommitting them to this fight, right? Just because we're coming across some pitfalls doesn't mean that we're over. And so part of the work we have to do now and consistently work with our congressional members, but also work with our local elected leaders, right? Can we pass resolutions? Can we pass city ordinances? Can we pass different things that allow us to show that we are ready to see debt cancellation happen in America, right? In California, they passed a student debt bill of rights, right? Ways in which we can protect borrowers and making sure that they are not being targeted by predatory student lending, making sure that they're not being targeted by collect callers, right? These are all things that we need to make sure that we are thinking through. But more so, again, we have to vote, right? This is an election year. We have to mobilize. We have to make sure that folks know that student debt is on the ballot. And so part of what we can do that is making sure that we're using our voices both on social media and in person, using the Power of Five, who are 5 people that you can make sure that you're responsible for turning out to the polls, and consistently reminding people that you are a student debt voter.
Wisdom, I love how you said that. You are a student debt voter. That's awesome. And also the mobilization of who are the 5 people, who are the 10 people that you know that you can tap, touch, and advocate with. And I love like building that circle of influence. That's awesome. And so a question for Julie. So Julie, you know that student debt, as Wisdom said, impacts just a vast array of people, and it doesn't necessarily always have to be where it's, there's a socioeconomic standard to the student debt and why we want to cancel it. It's been problematic. And in your eyes, I'd love for you to tell us what other problematic trends, or as you see it, the bait and switch, that trap people into these unaffordable products. I'd love for you to kind of just give an overview around what should folks be looking at when it comes to bait and switch, student debt, loan, and some of the things that the CFPB are protecting people against.
Yeah, it's a really good question. Before I get to that, I just wanted to touch on something that Wisdom was saying about advocating. I'm just reminded of how even as we've tried for these like broader based debt cancellation and fallen short, the problems that we're seeing in the student loan program are continuing to mount, like especially with the return to repayment. We're seeing a lot more people struggling to make their payments, the kind of fits and starts of different repayment plans that have been held up in court. I think it's really important for us to keep our eye on the ball that people are continuing to be harmed by the system that we have right now. One of the things that you all can do to help us with that is by filing complaints about yourself or encouraging people to file complaints with the CFPB, because we use those complaints both obviously to get help for the individual person who was harmed, but we also use them in our research and in our enforcement. So continuing to kind of document what's going on and put that in out front and center for the people who have the power to address those problems is super important for us. I think in terms of the bait and switch, the CFPB spends a lot of its time going after kind of shady practices in the lending industry. So, I was just looking back over some of our enforcement actions, and we've taken action against like auto lenders who are using remote disablers to disable people's cars even when those loans are not in default. We've taken action against kind of like set up to fail auto loans that are trapping people in debt that the lender knows that they can't possibly repay. We're looking closely at medical credit cards, which is kind of a growing problem for people where you walk into a doctor's office or a dentist's office expecting to pay with your health insurance or to get financial assistance from the hospital, and you walk out with a high interest credit card and a deal that you won't be able to make the payments in time. We've looked at solar loans as well. I think a really good example of kind of a high impact area of shady practices right now is door-to-door sales of solar financing, where someone's coming to your house and saying, I want to sell you these solar panels, but it comes with a loan where the fees are totally obscured from the person's view. So, we've seen instances where people are signing onto loans that cost about 30% more than what they're being sold. But I think one of the places where I've been paying a lot of attention, and where our research and monitoring teams are paying a lot of attention to, and I think fits really well with that kind of like bait and switch theme, is these areas where we see financial institutions kind of looking at areas that are really sort of like basic bread and butter costs for families, whether it's, the cost of higher education, or kind of like bridging the gap between one paycheck and another, paying your rent. So really kind of those basic expenses that really squeeze families. And they're coming in with these products that they're sort of saying like, I promise this isn't a loan. This is like this new kind of product that nobody's ever thought of before, and it's great for people. And they're taking that message to state legislators and others to get carve outs from the laws that protect people. And by the time we see those programs grow, by the time it's coming to our attention, it's too late in a certain sense, right? Like people have been saddled with these products that when we actually take a look at it, it is a loan or it is another kind of credit product. It has a higher interest rate than what you would have paid on another product. And it, has like fees and penalties that are worse than what you might have gotten on another credit product. So we're really wary of those kinds of bait and switch things where somebody feels like they're entering into something that's pretty safe for them, and they're finding that it's actually, on par with taking on like a payday loan or paying on a subprime credit card or something like that. So I think some examples that come to mind are, we did some work on earned wage access products, which are those products that you might see advertised on TV that offer to help you get from one paycheck to another. A lot of them will say, hey, there's no cost to this. But when we take a look at the tips and the other associated penalties that might be involved, it's actually a quite expensive loan for a person. And they might have been better off, paying on even a high interest credit card instead. a couple from the education space, because, student loans, like when we think about a federal student loan, that's one of the biggest places where people are borrowing for school. But there are these other products that are coming in and targeting people who might be more skittish or have heard that a federal student loan is a risky product to take on. And here comes a company saying, like, I've got this thing called an income share agreement. I promise you it's not a loan. All you have to do is pay me a percentage of your income over a period of time. Well, guess what? When you start to look at the terms of those, they look a lot like a loan, and the terms don't look any better than the other loans that are available to people. And in some cases, they look worse. Another area that I was really surprised as our team started digging in is something called a tuition payment plan. I think this is something that a lot of people found when they went to school. They get their financial aid package and it's got some grants and some loans, and then there's a balance that is left to pay. And colleges will often say, we've got this tuition payment plan where you can make the payments. Maybe you've got a $5,000 gap. You can make those payments on a monthly basis. And again, it's not framed as a loan. It's not framed as credit. But when you think about it, it is a credit product. And our team took a look at what the punishments or the penalties are for not paying on those tuition payment plans. And in many cases, it's a lot more onerous than what happens if you missed a payment on a loan. So people might think that this is a safer product, but they'll find that if you miss your payment on your tuition payment plan, you might not be let into your housing. You might have your transcripts withheld. You won't be able to register for classes in the following semester. So it's really important for CFPB to be able to bring those products to light. And I think, again, this is one of those places where we can use help from the communities. A lot of the times when we're hearing about these kind of like emerging bait and switch products, we're getting that through the visits that we do to local communities. So going out and talking to people in Detroit or Baltimore or Boston or Chicago, we're meeting with community advocates, and they are telling us what's happening in their local communities. And you can help tell us those things too.
So I think you brought up some really good advice for folks on the call, and a question came in actually for you and Wisdom, and I'd love to ask this to you. It says, one of the questions is from Vanessa Brown. What was the actual student loan dollar amount that were forgiven? Will students be contacted? And I guess another question to that is, how do you even know if you are in line to receive student debt cancellation? I think a lot of folks keep hearing it on the news. They just don't know how to know how they are able to get access to that. So Wisdom, I'd love to tee you up first, and Julia, please join in. One, how much has been canceled? Two, how do you know if your debt's been canceled? And three, if your debt hasn't been canceled, how can you get it canceled?
Yeah, great question. I definitely think we can tag team this, Julie. Yeah, let's talk about the stats and the wins, right? Sometimes it gets really easy to talk about the difficult parts of the advocacy, but we do want to talk about what we have won. Over $167 billion in student debt cancellation for Americans across this country, right? Like $68 billion in forgiveness for over 900,000 borrowers through the Public Service Loan Forgiveness Program. 5.5 billion for over 400,000 borrowers enrolled in the SAVE plan. 51 billion for those through income-driven payment adjustments for more than 1 million borrowers, and 28.7 billion for more than 1.6 million borrowers who colleges abruptly closed or who were defrauded by their college or were covered by court settlements. And then last but not least, 14.1 billion more for over 500,000 borrowers who were totally in permanent disability. And so we're seeing that there was debt cancellation for specific groups of borrowers who fell into this category. Something that I would love to, applaud President Biden as well as the advocates who were a part of this process is that there was targeted relief for groups who needed it the most. And essentially it was just this, theory of how can we do these smaller rounds of cancellation to get to a sum total. I think there's somewhere about 10% of student debt has been canceled altogether. And so by seeing that happen and by seeing us making sure that those specific groups were dealt with, we can make the argument in the case to continue to cancel more, right? We can see the economic and the permanent good for those who are most impacted by debt.
Yeah, I would say I look at the numbers on loan cancellation, and it's both like, man, we've fallen far short of where I would like to be, but also it gives me hope that we can do something, because at the end of the last administration, we were looking at just, a handful of loans that have been canceled. And here we are with, millions of borrowers having been affected. I think part of the question was about, how do you know if your loans are going to be forgiven? And I feel like that is such a tough one to answer, because these programs are still not working as perfectly as I would like them to. It would be great to be able to know where you are in the queue, and to know with certainty that your loan is going to be forgiven before you see the zeros in your account. But I think for many people, unfortunately, it really is like when you see those zeros, and that's like a very joyful time, but the time that comes before it is not quite as joyful. I do recommend, when people ask me this, like in my daily life, I recommend that people, if they have questions, reach out to the student loan ombudsman at Federal Student Aid. She has worked with some of us before, and is like, I don't know how she does as many things as she does. It really feels like she's giving a personal touch to thousands of people at the same time. But I would reach out if you have questions, and see if you can find out more information about your loan. But in some cases, it is a waiting game, which is unfortunate.
And so Wisdom and Julie, another student loan debt question. And then I want to turn it over to you, Julie, to tee up some of the work that you all have been doing at the CFPB about combating redlining and junk fees, which is also part of the conversation that we've been hearing about with cancellation of student debt. But the next question for both of you is, and this actually came into the chat, and I'd love to address it, where some people say, I don't want my tax dollars to go to the cancellation of student debt, or I don't have student debt. Why is this even an important topic or subject? And I know, Wisdom, you alluded to that, why it was important to economy holistically, but I would love to hear your thoughts on, especially as we're going into an election year. We hear a lot about the Biden administration, the Biden-Harris administration, sending out money to HBCUs, providing billions of dollars of access and capital. And I know in the economy space that HBCUs are extremely challenged with infrastructure and capacity and the way they're even able to access capital, right? And so when folks in that realm are saying, I don't want my money, my tax dollars to go to this, or why is this important to me? I'd love to hear how both of you are also ensuring that our members across the country understand that if it is not just to them, why are they advocating for something so important?
Great question. Something that we wrestle with all the time. I'm a single man who lives in DC and has no kids, but I pay taxes, and it helps pay for the school that's across the street from me, right? We all contribute towards public good, public programs that are in support and the development of all of us, right? But more so, I think about this from a place of, how are we investing in our future, right? How are we investing in a diverse workforce? How are we ensuring that we have the most brilliant minds in the room to be able to solve the most difficult and pressing issues that we're facing in America today? I always think back to the pandemic in 2020, right? In the midst of us going through that, not knowing what was going on, young people of color showed up and showed out. They showed up as poll workers, as poll watchers, working to make sure that democracy works for us all, right? But that only happens when we invest in our future. That only happens when we are giving people the opportunity to live a fair and equitable life. But we also have to recognize that today's price is not yesterday's price. The cost of college over a decade ago is not the same cost of college today. Further and further back, you can continue to compare it, right? I've been back to my alma mater, UC Santa Cruz, talking to alumni who were there at the beginning, and all they had to pay was for room and board. They didn't have to pay for their classes. They didn't have the same expenses, right? And so we can't look at it from that framework of, well, you have to pull yourself up by your bootstraps, or it's not my problem, right? This is something that is an opportunity to give people equity in our future, give them the opportunity to enter into the careers of their dreams, but also to be able to help build a more successful and thriving future for us all.
Wisdom, I think you said that wonderfully. And Julie, I'd love to hear your thoughts as well.
Sure. Yeah. I was just thinking, how can I add to what you said? Because I think you covered all the right points here. I think that, one, it's an interesting to hear how we hear from fewer and fewer people the point of view that you were expressing over time. I think since the time that I started doing this work to now, I hear it less and less because more and more people have debt. And so more and more families are affected by student debt. So to see more people kind of start to understand the issue, not because they have it themselves, but because their kids do, or their nieces and nephews, or their neighbors do, it's really interesting to watch that change over time. And I think it really illustrates just how widespread the problem is. But to Wisdom's point, I think this is, it's really important to pair the way we think about debt cancellation with what we want to do for the future. And so I love to hear us talking about debt cancellation in the context of what are we going to do to make college free or more affordable or whatever for people in the future, because we are experiencing what I would hope is like this generational dip where college was much more affordable for people in the past. We can make it more affordable for people in the future. We can make it so that people don't have to go into debt. And then we need to do something for the people who are caught in the middle. The other thing, this question makes me think of, and again, just inspired by what Wisdom said, is I think about like every time I go to the doctor these days, which seems to be, I've got 2 kids, we're there like all the time. And, the short staffing that we see in doctors' offices or daycares or paraprofessionals working in public schools, all of these are so closely related to the student debt crisis, where people are, their job choices are being dictated by their financial options. And it's hurting all of us and it's hurting society. So we really need to shift the way we think about higher education from kind of this private good, everybody's on their own, pay for it and then pay for your choices kind of way of thinking about things, to really acknowledging the benefit that it has to society as a whole and how it benefits us all to be educating people in ways that, put them into the jobs that benefit all of society.
And so in that, Julie, benefiting all society, the CFPB, this is actually your second call with us. Where, on your first call back in July, Director Rahit Chopra joined us and jumped right in
Sure.
first with questions. Yeah, he just answered questions from our members and gave a great, phenomenal feedback. One of the things that I have actually retagged on social media was you all's work around removing medical debt from credit reports, because as you know, it's extremely inaccurate. There's not a testament to how someone truly utilizes credit. And as we know, Black and Brown communities are more medically impacted. And so it's really just, it's predatory in a way. And I have always been a huge advocate for junk fees, the removal of junk fees, and how overdraft fees and all these other fees that financial institutions charge ultimately hurt people in the end. And so would love to hear what the CFPB is doing around predatory lending, some of the other amazing works you're doing. I see you all suing somebody all the time. It's great. So would love for you to let us know what you all are doing and how our folks and our members across the country can be advocating along with you for financial protection.
Yeah, we're super busy at the CFPB all the time. I think just to the points you raised on medical debt, we did introduce a rule back in June, a proposed rule to ban medical debt from credit reports. And I'm really excited about this one because, as you said, that should be, credit reports are supposed to be used to help lenders evaluate people's credit. And now they're being used for all kinds of purposes that are really more about coercing particular actions or behaviors from people. So the way that they're used for tenant screening for new rental properties, or using them for employee background checks, and then using them as a place to coerce people into paying medical debts. Our research has showed that medical billing and the debts that end up on people's credit reports can be incredibly inaccurate. And even where the dollar figure itself is accurate, it's not clear that it's the person who has to pay for it. Everyone has been through one of those disputes with their health insurance company or their hospital when it comes to charity care or financial assistance, where that other party is the one that's supposed to pay, and yet it ends up on your credit report anyway. We want to make sure that credit reports aren't used as a method of coercion to force people to pay things that they don't owe. And so we're looking to remove medical debt from credit reports. We've been doing a ton of work on junk fees. I think, one of the reasons why that work feels so resonant with people is that it's just like all around us at this point, where seemingly every purchase you make, there's all of a sudden, a little fee attached on the back end that you didn't know about, or a middleman who's kind of inserted themselves into a transaction that used to be between you and your grocery store, where now you get a little bit skimmed off the top. We just put out a paper a couple months ago about school lunch payments, where it used to be that you brought cash to school in order to pay for a school lunch, and during COVID we had this huge shift towards online payments because schools couldn't be handling cash at that time. But the companies that process those payments are charging fees that hit the lowest income families the hardest. So those families who aren't eligible for free lunch but are in that kind of reduced lunch bucket are facing these transaction fees every time they have to load money onto their students' accounts to pay for lunches. And if you can afford to put a year's worth of payments on your student's account, you pay the fee one time. And if you have to pay weekly, you're paying that fee every single week. So we're hot on the trail of lots of different junk fees. Just a couple of areas that I wanted to flag. One that the director and I have been talking a lot about is mortgage refinancing. So we're starting to see some progress on mortgage interest rates going down, which is really exciting. Now we're taking a look at how many people could benefit from refinancing on those loans. And there's already, even where the rates are right now, there's about 2.5 million people who are eligible to refinance their loans and would benefit. And we're talking about pretty significant benefits. We were in this period over the past couple of years where rates were historically low, and then they went from historically low to historically high. So we may not get back down here, but even if the rates went kind of in the middle, it's going to save people hundreds of dollars a month on their mortgages. And it can mean the difference between you making your payment successfully and having your home foreclosed on. So one of the reasons we're watching this area particularly carefully is that, there are two trends that make us concerned. One is, during this period of high interest rates, Black and brown borrowers are more likely to actually purchase a home and take on a mortgage than other homeowners. The other trend is that during periods of low interest rates, Black and brown borrowers tend to be the least likely to be able to take advantage of refinancing. And that's for a lot of reasons. It can be straight up, discrimination and redlining. It can be the size of the mortgages. It can be people's reluctance to pay the costs of refinancing. But we want to make sure that everyone who is eligible to refinance and would benefit from it actually has a chance to do so. And so we're looking at this topic from a bunch of different angles. One is, how can we get the mortgage industry to create more kind of streamlined ways for people to refinance their loans? So less paperwork, especially for people who just bought their house a little while ago and showed all of that paperwork. Like, they shouldn't have to go through the whole process again. We're looking really closely at the closing costs that people pay. Again, people who paid for title insurance when they bought a house 2 years ago are being asked to pay the same amount 2 years later. So we're looking really closely at how we can minimize the cost to people. And then we're going to be taking a really close look at who's getting refinancing. Are the neighborhoods where people need it the most getting it? Are we seeing lenders apply their practices equally across all borrowers? So that one is really important to us. And some of the work that we've done, which the director may have talked about last time, on appraisal bias, I think will help us out there too, because we've been really concerned about discrimination in the home appraisal industry, which inhibits people's ability to get these loans. And then the other thing I want to flag is our work on credit cards. you may have seen that we took a big action recently to lower the late fees on credit cards, which is a super important issue for a lot of families. So we're proposing to lower, or we are lowering credit card interest rates, credit card late fees, sorry, to $8. But we're also starting to delve into credit card delinquencies and the trends that we're seeing there in terms of delinquencies for borrowers. There are some pretty eye-popping figures out there for the rates of delinquency, especially among people who got their credit card in the last couple of years. So people had this kind of like downturn on delinquencies during the pandemic, where they were being assisted by pandemic aid. And they, they maybe were making fewer purchases, but delinquencies for all credit card borrowers went right back up after the pandemic. And then for these kind of newer credit card borrowers, they're particularly high. One of the things we've been really interested in is kind of like what, there are lots of different factors that go into credit card borrowing, and we can look at people's needs for money. We can look at like the things that people are buying, but we really wanted to zero in on what are the industry practices that are driving some of this debt and delinquency. And one of the most interesting early findings I thought that we saw was how the rates got so high on credit cards, and then how the industry has sort of shifted to be really reliant on people paying those high interest rates. So what we saw was, as the Federal Reserve kind of hiked rates across the board, credit card companies took advantage of that and hiked their rates even further. So the kind of difference between where the rate needed to be to cover their costs and where they were setting it has been growing over time. And you have this profit margin that's been baked into people's credit card interest rates. And now we're seeing people with rates at 25 and 30% on their credit cards. And then at the same time, the industry has become more dependent on that interest income as a means of profiting. And that means we need to look really closely at the industry practices that are keeping people in debt or incentivizing people to revolve on their cards rather than paying them off on a monthly basis. So that's been a big area of focus for us, and we'll see more from us in the future.
Thank you so much, Julie. And so I'm going to give Wisdom our last few minutes. Wisdom, you now are on the national, well, you've always been part of the national team, but now you're in a new role around advocacy. What I would love for you to do is our biggest campaign right now, and all of it matters for economy. Again, the number one voting issue that our voters see as an issue is economy. What do you have to say to our members today when it comes to voting? How do they volunteer? How do they work with the field team to get mobilized? What do they need to do? And why is this election so important?
Absolutely. Well, again, I want to thank you, Keisha. Thank you, Lindsay. And thank you to our partners at CFPB for having me this evening. And shout out to all the work that you're also doing around these credit card late fees, because I know that I need that. You are advocating for millennial issues, right? There's a joke about what do Black millennials dream of, and that's debt cancellation, right? And not being burdened by the weight of just trying to live your life and thrive in America today. And so when I think about the work that we're doing at the NAACP, we recognize that all of our work is connected to electoral politics, right? That it is important for us to move the needle by building Black political power. And so that means making sure that we recognize that the issues that are most important to our communities are on the ballot, right? This has been an issue that has been fought for time in and time out. And is continuing to grow and be building a great momentum. A couple of years ago, we were at the Supreme Court with a sea full of young Black people demanding that student debt cancellation happen. The student cancellation is a priority. And so what we have to do is we have to continue to finish and run that race. And so at the NAACP, we are making sure that we are mobilizing voters through our direct relational voter turnout program, making sure that we are working through micro-influencers through our community, right? What is more important than some big celebrity to telling you to go vote is the person in your community, is the person in your dorm room, is the person that you see at the grocery store, is your auntie, uncle, brother, sister, mother, all the people who are important to you in your day-to-day life, engaging you around this election, right? Voting is a family affair, right? These are things that should be discussed at the dining room table. These are things that you should be discussing and passing with your friends. We have another debate coming up next week, right? It's important for us to be aware and informed about who the candidates are and like what is at stake, but also recognizing that it's not just a presidential election, but there are elections happening all up and down the ballot, and that it's never an off year. And so part of what we do at the NAACP is build a culture of voting, because when we build a culture of voting, we build a culture of power. And so you can go to naacp.org/vote to engage with the plethora of resources that we have. I'm going to drop it here in the chat if I can, but if not, I'm going to ask one of my colleagues to be able to do that. Definitely a really great resource through the NAACP here. I think it's just coming up on my side, but if you can drop that for everybody else. Essentially there you can go and check your voter registration status. It takes less than 2 minutes to do that. You can see a voter guide, right? Check for your state and see what is actually on the ballot. You can learn more about the issues that are important to the NAACP at the federal level, and how you can advocate and speak to your community members, your elected officials, and those who are running for elected office. You can make sure you know where your polling location is. You can make sure that if you are going to be voting absentee, that you can request your absentee ballot. It's got everything you need, right? We want to make sure that we are a one-stop shop to provide you the resources necessary. And what's super great about this is that you can share this with your community, you can share this with your friends, you can share with people at the office. It's so important for us to make sure that we are aware of what's at stake. More so important, it's important for us to make sure that we are reporting voting incidents, right? If we are seeing incidents of voter suppression happen, that we are documenting that we're reporting that, and we're getting help to make sure that we address that in real time. And so the last thing that I'll leave again is that we are all student debt voters, right? Julie, you were talking about this so well earlier, that even for those who feel like student debt doesn't impact them, it impacts us at some level or other, right? We think about young children who haven't even started college yet, right? Who may be facing the burden of student debt because their father or mother is dealing with that, and that impacts their ability to purchase a car or to buy a home or to support their family networks, right? You know, it's so important for us to be able to give people a new opportunity, a new start to be able to engage in our economic system at every level. That starts with our vote.
Well, thank you so much, Wisdom and Julie, for joining us today. We were honored to have you. We are so honored to learn from you both. So just so our folks know on the call, we are having a third call with the CFPB in October. October is going to be a really heavy economy month. We've got a lot of great things coming your way to our members. It would be information on any type of financial inclusion and opportunity. In addition to, we are hosting another call with CFPB to talk about digital AI and how to protect your digital rights in the financial space. And you'll see a lot of that happening in the month of October. So we've put some links in the chat. Look forward to some emails after this, kind of teeing up some of the things that our speakers have said today. We are again thankful for our members across the country and the work the NAACP is doing. And we hope everyone has a great night, and we'll see you all again in October.
Thank you. Thanks for the opportunity.
Welcome. Thanks, Julie, for coming. Thanks, Wisdom, for coming.
Thanks, Julie. Thanks, Kat. And Graciela. Thank you, Keisha. Thank you, Lindsay. Appreciate y'all.
Thank you all. Bye-bye.